Morning, morning, morning.
Good morning, Ryan. Good morning, everyone.
Good morning. Let me quickly get the legals. 1 second. Hang on. Hold on to your horses. It's budget day. Happy budget day.
Yay. Oh, I
Yay.
can't wait.
1 second. Let me do the legals. Nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or its affiliates, including the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. So, are you looking forward to budget?
Yes, mate. I can't wait. I'm looking forward to it as much as I would look forward to, I don't know, something like a root canal at the dentist or something
Oh,
like that.
gosh. I am very much looking forward to you ranting away later on.
Well, I hear murmurings that our good friends over at New Squawk have already opened a book on how high my blood pressure might get this afternoon.
Oh,
So,
buy 'em, buy 'em.
oh dear. Oh, it's just going to be a shambles, isn't it?
Oh no! Oh no! Well, look, before that all happens and before the wheels fall off the country, what happened yesterday?
Yeah, indeed. Let's get on to yesterday because there was quite a lot going on. Actually, it ended up being a decent day for equities, with the S&P 500 ending the day around 0.2% higher, the Nasdaq 100 adding about 1%, and the Nasdaq Composite reaching a new record high. And that came after what was actually a bit of a mixed slate of US economic data yesterday afternoon. We had the latest consumer confidence figures from the Conference Board, that index rising to 108.7 in October, which was well above the forecast range, well above the prior of 98.7, and actually the highest level of consumer confidence since all the way back in January. At the same time as that consumer confidence beat, we had a rather soft JOLTS job openings report, which showed that job openings in September fell to 7.44 million for a prior 8.04 million. Now, that is the lowest level of job openings since February of 2021, but I would like to just add a bit of a health warning to that data, which is that the JOLTS figure references job openings on the last working day of the month. So in September, what that figure is saying, on the 30th of September, there were 7.44 million job openings in the United States. Now, importantly, on the 26th of September, Hurricane Helene made landfall in the south of the United States, and it was still battering North Carolina when that survey was conducted. So if you dig into the data, we actually saw job openings fall by 325,000 on a monthly basis in the southern states, as the BLS classify them, which includes those states that were hit by the hurricane and accounts for almost all of the downside surprise when you consider that the prior print was revised lower to about 7.8 million. This also, and this, everything's winding me up at the moment, but this particularly wound me up yesterday. All these morons on the internet who keep claiming that the non-farm payrolls data is manipulated and it's not worth the paper it's written on, it's being made up. Well, actually, the difference in survey periods explains why the September non-farm payrolls print showed 254,000 jobs being added, because that referenced how the labour market conditions were in the week containing the 12th of September, before Hurricane Helene, before Hurricane Milton, before any strikes at Boeing, etc., etc.,
Nah,
etc.
mate. Nah, 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 nah. No, it's just all because it's all made up. It's all fabricated and
Well, I was going to say, I appreciate that, my slightly more logical and rational explanation probably doesn't get quite as
boring.
many
It's a
clicks
boring
on the
answer.
internet. But it is a case where actually, on this occasion, both of those surveys
And
can
and al-
be
and
and
also
probably are right.
and also let's not forget that, as me and you have said in the past, that give them some credit. There's a lot of data they got to get in every month.
Yeah, I
Yeah,
mean, you've got
no wonder it
160
needs
odd
to be
million
reviewed.
workers, for God's sake.
Yeah, but no, but you want to
Yes.
be but they should be right to the person. Oh, do me a favor.
It's a joke. In any case, the softer JOLTS data did rather stop the sell off in the Treasury market in its tracks. We did see early doors yesterday, the 10-year yield rise to north of 4.3% for the first time since July, but buyers came in after the JOLTS report, with the 2 and 10-year notes ending the day down by around about 3 basis points apiece, 2s dipping below 4.1% and 10s dipping below 4.25%, and that move was helped along by what was actually a very very well received 7-year auction yesterday, which stopped through the when issued by a chunky 2 basis points compared to the 6 auction average, which was a 0.1 basis point tail. In the foreign exchange space, we saw the dollar end the day pretty much unchanged. The dollar index did briefly notch fresh 2-month highs north of 104.60, but gave up those gains as treasuries pared losses throughout the afternoon session. Cable reclaimed the 130 figure ahead of the budget today, and that move came again amid considerable downside in euro sterling, which broke below the 83 figure and tested close to 2-year lows. They come in around 82.93 from memory. And in the commodities space, we saw gold rally by over 1%, printing fresh all-time highs, while crude traded choppy but ended the day pretty much unchanged. In terms of news flow, quite a lot to get through this morning. We had in the tech space, Apple unveiling a new Mac Mini. Apparently, it features something called an M4 and an M4 Pro. I've got absolutely no idea what they are, as you may be able to tell, but I do know that it costs $600. And given that Apple don't understand foreign exchange, it probably costs £600 as well. Sticking with tech and into the AI space, OpenAI, they are reportedly in talks with Broadcom to develop some new AI-related chips. Currently, as I think probably everyone knows at this point, OpenAI using chips from AMD and NVIDIA. They have also reserved manufacturing capacity in 2026 with TSMC, Taiwan Semiconductor, so perhaps looking to build out some of their own chips. Both of those stories coming via Reuters sources. On the election, of course, we are now just 6 days away from polling day. The New York Times reporting yesterday that China have apparently been trying to hack into various email and social media accounts of Trump's family members, as well as some of President Biden's aides. Given that probably Biden can't even remember his own Twitter password, I think China will probably find that one quite easy.
Well, yeah, but steady on, because I would back Biden knowing how to use a computer more than you. Let's be honest.
Well, yeah, you're probably right on that one, unfortunately. Moving swiftly on to the earnings slate that we had after hours yesterday, Alphabet delivered top and bottom line beats with EPS at $2.12, revenue at $88 and $88.3 billion, I should say. Also a fairly chunky beat on ads and cloud revenue. Shares were up by about 5% after hours, but did pair gains relatively quickly. We also heard from Visa yesterday, again delivering top and bottom line beats. They also raised their quarterly dividend by about 13%, and they traded 2% higher after hours. But the big mover in the post-market session yesterday in terms of major stocks, I know Reddit and Snapchat were jumping around all over the place, which I'm sure kept the kids entertained. But the big major mover after hours yesterday was AMD. Their top line delivered a beat on revenue at $6.8 billion. Bottom line was in line with EPS at 92 cents. Their guidance was a little bit soft, though, noting that they see Q4 revenue between $7.2 and $7.8 billion. The street had been looking for 7.6. AMD were down by as much as 5% in the aftermarket session yesterday, with NVIDIA and Broadcom, obviously two other big players in the space, as we mentioned earlier, trading about 0.5% lower in sympathy with that move. And that is pretty much a lot in terms of yesterday.
Perfect. Well, I'll keep this short and sweet because I'm expecting you to have a little bit of a rant about the budget coming up. So just quickly
Just
start
one,
off in the
surely not.
well, smalls. Start off in the Middle East because why not? It's barrel laughs over there. Israeli officials say that Hezbollah is ready to distance itself from Hamas in Gaza, and the IDF is close to ending ground operations in the villages on the Lebanese border with Israel. And the army has recommended to Prime Minister Netanyahu that the time is right to end fighting in Lebanon. Moving slightly further away, Trump said on Tuesday that the EU would pay a big price for not buying enough American exports if he won the election. Obviously, there's a lot to be said for how much this is just trying to G up his supporters rather than actual actions when he gets in. And I think it's, well, my opinion is it's kind of a foregone conclusion that he will get in, but we'll see. In gold, obviously, global gold demand swelled by 5% in the third quarter, setting a record for the period and lifting consumption above $100 billion for the first time, according to the World Gold Council. And
Sorry, can I just
go on.
Well, I was just going to say that did come from the World Gold Council, who might just
Well,
be a
yeah, talk your own
little
book.
bit biased on that one.
Talk your own, but yeah, but as I always say, no one else is going to talk your book, so you better talk it for
Oh
them.
no, 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 I agree.
But on that, Goldman has slightly lowered its gold forecast to $3,000 rather than 3,080. So that was the intern needing to do something on the spreadsheet.
Miners
By December,
moonlighting.
well, exactly. Oh, by December 2025, maintaining its bullish stance, primarily driven by robust demand for physical gold from financial and monetary authorities, so read central banks and investors and speculators. Meanwhile, Volkswagen, their operating profits plunged 42% on weak performance in the core passenger unit and high costs, including model revamps, hitting the automaker very, very hard. And as we know, there's ongoing discussions in Germany about closing plants and potentially upwards of 10,000 workers being laid off, wages being cut, plenty of strikes coming there from the next couple of months. So, one to watch over there. And finally, Boeing, the strike action over there. Apparently, Boeing and union leaders have held fruitful talks on Tuesday with the help of Biden administration top labor officials. One to watch there. However, we've seen no signs that this is going to come to an end anytime soon. But, as always, we're reliant on the next headline. And that's your lot.
Good. Right. Well, now for the
Thanks.
moment that you've all been waiting for, which is
Hey, get
me
comfy.
to moan about the budget. Make yourself a cup of tea. Let's get through what else is going on before that, because we do have quite a busy economic docket. At 10 o'clock this morning, we have the first read on third quarter GDP out of the Eurozone. The economy expected to have grown at a quarterly rate of 0.2%, which would be unchanged from the pace seen in Q2. At 12:15, we have the October ADP employment figures from the United States. The survey is set to show employment having risen by 110,000 for a prior 143,000. Although, of course, bear in mind that this has pretty much no correlation at all with the official non-farm payrolls number that we will be getting on Friday lunchtime. At lunchtime today, we have the first estimate of Q3 GDP from the United States. GDP expected to have grown by 3% on an annualized quarter-on-quarter basis. The Atlanta Fed GDP Now tracker, I think yesterday was at 2.8%, and that has been a pretty reliable indicator of economic growth throughout this cycle. So perhaps some downside risk to that consensus expectation. For those who still care about inflation, the core PCE deflator, that's expected at 2%, down from a prior 2.8. Other bits of macro intelligence or importance today, also at 12:30, we have the issuance breakdown as part of the US Treasury's quarterly refunding announcement. Consensus sees auction sizes remaining stable in the fourth quarter. At 1 o'clock, we have flash inflation data due from Germany, where CPI is expected to have risen by 1.8% on the year in October. And that, of course, comes ahead of the Eurozone-wide CPI figures that we get at 10 o'clock UK time tomorrow morning. Of course, the main event, though, of the day is going to be the budget here in the UK, which comes right
Yes.
after Prime Minister's questions, which, if it runs to time, means that Chancellor Rachel Reeves should be standing up in the Commons at around about 12:30 UK time. Most of the budget has been briefed quite considerably in advance, and anyone expecting any rabbits out of the hat, well, we probably can't afford any rabbits, so sorry to dash your
Oh,
hopes on
God.
that one. The budget on the whole is likely to bring around 40 billion, 40, of tax hikes and spending cuts. Firstly, to plug the supposed £22 billion black hole in the public finances, and secondly, to build a greater degree of fiscal headroom against the fiscal rules. That headroom currently stands at around £20 billion. Of course, it is worth bearing in mind that those fiscal rules are likely to change, but I will get onto that momentarily. In terms of those tax hikes, the Labour government obviously running on a manifesto pledge not to raise income tax, national insurance, or VAT. The language from the Prime Minister and the Chancellor has changed slightly over the last week or so, with the slogan now being, and I quote here because this is quite cringeworthy, "We will, quote, protect your pay slips." So that means that national insurance could, and hint will, change, but it will be the employer employer contribution which changes. And that is
Boo!
likely to rise by between 1 and 2 percentage points, and that could raise anywhere between about 10 and 20 billion pounds. We're also likely to see various other measures in terms of tax announced in the budget. Just to run through some of the likely announcements, the income tax thresholds, they are likely to be frozen. That freeze currently runs until 2028. That's likely to be extended until 2030. That is effectively a stealth tax. For those unaware, we pay income tax here in the UK on a sliding scale based on the amount of salary that you receive. As wages rise over time and the thresholds of salary remain unchanged, more and more people are dragged into those higher tax thresholds. As a result of that, the move is likely to raise about 3 billion quid a year, and it's likely to mean that about 1 million people are paying higher taxes in terms of income tax by the end of this parliament. Other metrics, capital gains tax on share sales, that's
Boo!
likely to be increased from the current 20% to about 25%, although capital gains tax on property is likely to remain unchanged. Inheritance tax, various measures around inheritance tax are likely to be changed, including some of the so-called loopholes whereby certain agricultural land and various pension pots can currently be passed on tax free. There's also going to be a whole host of other bits and bobs going on, as if that wasn't already enough, including potential tweaks to fuel duty and a potential cut in the stamp duty thresholds. Currently, you don't pay stamp duty on property purchases below 250,000. That's likely to be cut in half. Along with that, there will be departmental spending cuts to numerous government departments, excluding those where spending is protected, including defence, which is likely to get a £3 billion injection, and health, which is likely to see a boost in spending of £5 billion per year over the next 2 years. We also heard last night that the minimum wage will be rising by about 7%. That will come in, I believe, from next April. Of course, that's not government funded. Employers have got to fund that themselves. And that is a rise that is about 3 times the current rate of inflation. We are also, as I alluded to earlier on, going to hear a lot on borrowing. Currently, the UK judges progress against our fiscal rules, which state that the debt GDP ratio has to be falling in the 5th year of the OBR's forecast. We judge that debt metric very simply as what is the amount of debt that the government has, excluding the BOE. It can't be much simpler. Excluding public sector banks. That is going to change to a metric called, and this is really catchy, public sector net financial liabilities. What does that mean in English? Well, it means 2 things. One, it means that there is a hell of a lot more headroom because this is a more comprehensive or expansionary measure. So it could bring budgetary headroom to about £50 billion. And the way that happens is because you are netting off borrowing against assets. So what that means, for example, is rather than just looking at debt, you're looking at debt, but you're also taking into account government assets such as student loans or fully funded pension schemes and all that kind of thing. When you account for that change in debt measurement and a previous governmental pledge to spend 2.5% of GDP on investment, that could result in up to £77 billion worth of extra borrowing over the next 5 years. As we touched on last week, depending on how that borrowing is structured, it could also potentially lead to limitless government spending if borrowing is then funneled through an arm's length body such as the National Wealth Fund or Great British Energy. Naturally, markets will therefore be looking for clarity and some very, very strong guardrails against that possibility. Effectively, the market, particularly gilts, which have actually rallied at the open, will be looking for the Chancellor to say something along the lines of, yes, we've got 50 billion quid's worth of headroom, but we're only going to use 20 billion pounds worth of it,
Well,
and have
this is
some
it, right?
structure around how that is
So
calculated,
just on
rather
that,
than going the Quarteng route.
well, this is it. Basically, we just want some assurance from her that she's not going to use a technical phrase, piss it up the wall.
Exactly. And I think the important thing is that markets will be looking for is not just assurance from Reeves. I think the market will be looking for institutional assurance, because if Reeves is, at some point in the next couple of years shuffled off to a different department, what's to
Fingers
stop,
crossed.
someone else coming? Well, let's say, I don't know, Diane Abbott becomes the chancellor.
Oh
Would you want
God!
to
Oh,
own gilts?
don't no. Whoa, 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 whoa! Don't even joke about that. Come on, mate. It's a family show.
I mean, you never know. But I
Oh
think that
God.
is why the market will be looking for some concrete constraints around that new borrowing metric, as opposed to just going, "Oh, it's okay. Rachel Reeves said she won't spend the money." That's like giving you a credit card with no limit and sending you off to the Stafford and saying, "Please only buy one
Well,
round."
well, steady, steady, because Rich Bernard is listening, and I've already been called up recently from my expense account. Steady on, steady on.
Oh
No
dear.
need. There is no
Um,
need for that.
The other thing to bear in mind from the budget is the gilt issuance remit. Morgan Stanley see that rising modestly to 285 billion from the current 278. Of course, also looking for that into the remainder of the 5-year forecast horizon as well. Budget speeches, for those unaware, they usually last anywhere between an hour and an hour and a half. So that's going to be a very, very fun lunchtime for everyone here in the UK. A few other bits and bobs just to cover off very briefly. We do have some central bank speakers today: the ECB's
Joy.
Nagel, Vilroy, and Schnabel, as well as the SNB governor chair, I should say, Schlegel, and the BOC governor Macklem. And it is another busy slate of earnings today. Before the open, we hear from Eli Lilly and Caterpillar, among others. And then after the market close,
Oh,
Magnificent
on
Seven
Caterpillar,
earnings. Oh, go on.
one of your favourites, no? A cheeky little bellwether stock for you.
It is a bellwether stock, yeah, and we'll see
There
whether
you
they can
go.
sort of slither higher in the
Oh,
pre-market.
well, that no, that was laboured. That was laboured. No. Well,
Really
moving on,
was.
moving on.
Moving on quickly, we do have Magnificent Seven earnings continuing after the market close. We hear from Microsoft and Meta, and that obviously comes after earnings from Alphabet yesterday and ahead of earnings from Amazon and from Apple after the market close tomorrow. So the earnings calendar is not slowing down at all.
Perfect. Well, thank
That's
you very
it,
much
and
as always.
I'm okay. My blood pressure's fine. I haven't had my heart
Yeah,
rate's
well,
under control. We're all good.
should we meet up for a post-budget beer later on? Because I am in town. I
Might
am
need
currently
something
sitting here
stronger.
thinking. Well, that can be arranged. That can be arranged. But Mr. Brown, thank you as always, guys. If you are trading today, as always, keep it tight. And yeah, we will tune in. Well, sorry, no, you will tune in. We will see you tomorrow. Have a good one. Take care. Bye bye.
Bye.
Do 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 do.